Okay guys, what we're going to do today is I'm going to give you an update of Vanguard and show you what can happen from small beginnings. Now this journey started about 2.5 years ago, and what it is, it's the little accounts as money just being harvested in there and surplus money that I have from my own trading. Let's roll the intro and I'll show you. And a warm welcome, one and all. But before we get into this, I need a coffee, because we all know Scruffy likes a coffee and it's Sunday morning and I'm knackered. Oh, I'll do with another one actually. Right, passive income, Vanguard. Should you do it? Why do I do it? And is it for everybody? Well, the answer to is it for everybody is yes. And the sooner you start, the better. And even if you're only putting a few quid away, it doesn't have to be in a Vanguard, it doesn't have to be in anything. But do put it in some kind of an index fund that'll move over the years with potential growth, and do what's called DCA, dollar cost average, into it. If the market goes down, don't worry about it. I do this on a micro scale on my day trades. You know, you'll see it, people call it madness, and its nickname is madness. But it's really dollar cost averaging into a position. But I'm using a set amount of money. And I do a similar thing with the Vanguard, but on a bigger scale. Okay. Now, the idea behind it is I have a 3-pot portfolio, and I'll show you that portfolio. But it's basically an all cap, FTSE all cap, because it's a global fund with over 7,000 sort of stocks and shares in it that theoretically should be relatively smooth, and it is to a degree, but there is some worry in times ahead, which I'm going to touch on when I pull the chart up. I then have a put my teeth back in, a life strategy 60, which is 60% stocks and shares, 40% bonds. And again, that is like a safe haven to help flatten money out. And then I have the S&P 500, which is the big daddy of the index funds that people track to get a sentiment of the marketplace. So that's the theory behind it, and then I'll alternate. Now, I did used to have an emerging markets fund that did quite well, but it stalled and it was very expensive to run. And I made the decision when I started reading through the different stocks and shares, there's an element of emerging markets in the all cap. So did I need 2 funds that were roughly the same? No, not particularly. So I decided to take that risky one out. Now you could say the S&P is inside the all cap as well, and to a degree it is. But again, it's nice to see a sentiment of the market, and it is one that's pretty much performed year in, year out for the last 30 odd years. So why not keep it? But again, there's rumbles on the horizon that I might need to change. So where am I going with all of this? Well, on a Sunday morning, I like to relax, grab a coffee, go through the week. Sometimes I do a coffee with Scruff, where it's the thoughts of you guys, and sort of I'll try and put it into camera and put it into my strange way of doing things. Other times it's like this, where I'm just reassessing the Vanguard, and I do that once a month. Now you can say it's early because it's the 20th and it's a bit early for an October update, but I'll tell you why. On Friday, well, it was actually Thursday night, I hit my wages for the month. You know, the guys in the squad saw it right through, you know, and I did it every 15 minutes for them. This is what I'm doing, this is what I'm doing, this is what I'm doing. And I've now finished. I've got my entire salary for the month. I've got 10 days ahead of schedule. I've put extra money over into this. And I've also done the small account, which I did an update the other day. And you saw that entire journey. Now, I won't necessarily be showing the entire journey again, because every video gets kicked into, and you get the morons who go, you only show the winners and everything. Well, I didn't. I showed you the losers as well, and I still got kicked into, so can't win. I'll get battered either way. So my personal information and my personal stats will be what I decide to give, not what somebody asks for.
you can suck it.
And I think that's the fairest way, you know, and if they don't like it, well, I've told them many times, don't watch it, you know, but they still come back, which amazes me. The people who hate me the most are the ones who watch me the most.
Oh, here we go.
No. Counterintuitive. Hey ho. Never mind, I'm still here, you know, still live with a beautiful woman. Go on lots of holidays. Going on holiday again, boys and girls. I am going on holiday again. But this time, I'm going with the squad. And why? Because the squad have done really well. And they see exactly what I do. They're doing quite well themselves. And now we're going on holiday together to Benidorm. And I'm going with this beautiful woman who's brought me another coffee because I like you. Oh, you're great. Are you covered in pain?
I am, yes. I'm going to finish it.
So I'll cover you in something else.
Oh, that's disgusting.
I'm not even answering that one.
It was kisses and love.
Daddy's home.
Well, it started that way anyway. Yes, we are going to holiday to Benidorm. In fact, we've got our t-shirts. Just get one of these things. Ah, there. Yeah, we all going. Even bought them t-shirts so they can all have a t-shirt each and one thing and another. And as you can see, there's loads of t-shirts because there's loads of us going. They wouldn't go unless they know what I do is correct. That's something to think about. You know, they're putting their own money in the pocket. But anyway, that's another story. We'll do a few videos while we're out there having a bit of a laugh in the sun because we have in a classroom as well because I booked a hotel for that and laid on food and everything. So
I'd buy that for $1.
Would you do it? I would, because I love them guys. Then they deserve all of my time that I give. They genuinely do. Anyway, you're giving me time here. Let's jump over onto the chart and off. Because I got all excited there. Because one thing you'll know with these videos, anybody who's followed me for a long time, the newer people will be sort of going, what the feck's going on here? I don't script anything. I don't believe in it. And when I do my charts and I do my chart read, I never use a rollback chart, you know, so you never see me on TradingView with a chart that's 5 or 6 months old. You will see me in the moment and you'll be able to check the timestamps. If you run down, you'll see the videos are updated on the day of the trade and normally an hour or so after the trade's done. And if you're in the squad, they're actually seeing it sort of before I go to market. So I'll tell them exactly what I'm doing and the follow along sort of thing. Not a signal service. I don't believe in that. And I've got zero time for anybody looking for signals. Anyway, cut long story short, let's get into this. So, 3 pots. Now, if you go onto your brokers, this is my web trader broker, it actually has the Vanguards in them. So when I come to go to the Vanguard, what it's tracking is actually these charts. So there are various things to keep an eye on. Now, if I go back into this all cap, there's no point putting any levels into it because we're at all-time highs. We are right at the top. So what I'm keeping an eye on is what's happening. Now, this is concerning me. It's very, very high. And the last time it was high, it dropped off. So there is a correction due. But you can see there's still strength in the market. These are what Bollinger Bands show. They show strength. Okay. Now, I keep a track on a weekly chart, which is here. And it's not quite pushing up high. So there is feasible movement to the upper side. But it is starting to struggle. And I know that because I can see it in the tails. Okay. So where feasibly can this go? So I have to track it out. So if I just get an extension on here, I can see the last wave of the market started here and it kind of got up to roughly around this point here. And then if I pull that back down, it'll start giving me key areas. Now, I like Fibonacci in my day trades. So if I drop that onto there, I can see it's already attempted to come up to the 27. It pulled away and then has had a rally back into it. So the furthest it'll go looking at this is possibly here. Okay. Now that's just based on maths and ratios. Okay. There will be those that'll go, oh, it's just a couple of lines. How do you know? because history repeats itself. Now, if I was to put on a retracement of this, so Fibonacci retracement, from the same area, and then put that in, it'll actually show me where the key bounce point is. And the first key bounce point is a 23. It came down, bounced off that line. As you can see, it held there for a few weeks, pushed away, came back to where it had came from, because these are what's called areas of value. Stayed there for a while, came around, stalled in the same places. So this isn't coincidence, guys. It's just the way the market works. Pushed down, back to 23, has failed. So it has no other choice but to go higher at this point. It did, and it stalled in and around the 27. So now I'm watching these two levels to see what happens. Now I'll dollar cost average down into here, which I'll be fine, with a view of moving the entire pot when it gets up here, because it'll be so stretched. There'll be a reversal due, and I'll just move it out for a month or two and then see what's going on. But if the markets are changing, who knows, I might even just hold it in and just cost average into it all the time. Okay, it's really just how I feel. But one thing is, there's a big move in the markets when you're listening to the pundits that there could be a 30 to 50% correction. But the question is, it's a 30 or 50% correction of what? Is it the last move, or is it the entire move? I don't know, and I'm not sure whether they do either. So I'll just play devil's advocate and trade what I see based on the way that I do my trading anyway. Now, if we look at this, this is the 60. Now I'll just take off the drawings that I've had into these, because it has bust through, and it's still showing good signs at this moment in time. It's got good movement, pushing up, and we can see it came into a plateau here, and there was a singular move up, which was this particular move here. Now again, if we put on an extension just so we can see what was going on, there is, oh, wrong one, sorry, put the extension on rather, we can see there's a similar pattern emerging. Okay, went up, came down, pushed up, and again, if I drop these in, which is there, and then another one above it, it's between these lines, and it came from this point here. Similar scenario. Let's take that away, and I'll put a retracement on that particular move. From here to here, it did the same thing. Okay, so this is a different fund with a different makeup, but the actual buy-in sentiment is roughly the same. Came down, failed, back, up, failed, spiked down, and is then pushed up. So again, that's my target point for where I want the money. Okay, and then I'll take it down into the S&P 500. But let me flick this over a second, just so I can show you something. Drop the indicators on. Again, it's starting to stretch. Now, the last time it was there, now I'm using basic indicators here, no adapted indicators. This is just what the general big market looks at. Again, crashed here, and it came down considerably there. Now, you can dollar cost average in, and you think, well, you're losing money. But actually, if I add money into this moving down, when it pushes higher, I've actually got better units at a better price. So it reduces an exposure but increases an upside. And that's the idea. So this one would be expensive, not so much. This is dirt cheap. And then as it comes up, makes money. Okay, dollar cost averaging. Now from here, we look at the S&P 500. Now this one is a different animal altogether. You know, you can see it, but same move, same pullback, impulse, back down again, and then up. So again, if I'm starting to mark this thing out, put the same move in, extension, and down, across, same makeup. Okay, Now this is why I'm considering combining them all together, because they're all doing the same thing. They're following the exact same pattern over and over. Okay, drop this down, put on my retracement tool under there, and again. So there you go. There's 3 pots following an identical path with an upshot.
You're taller than I imagined.
I'm bigger in every department.
So I've got a real choice here. Do I just dump everything in the S&P 500? Do I leave it the way it is? Or what? Do I cash it all out? Well, the thing is, I don't really want to cash it all out. But what I do want to do is capitalize on my money. You know, I don't want to lose it, but at the same time, I don't want to miss out on some growth. So I'll think about it over the next couple of days. Worst case scenario is I'll put it in the S&P 500. The reason being is it's the safer of the 3, you know, because it's literally has performed every year for about 30 odd years. It hasn't really lost money. So it's a safe bet. It's kind of just one of them mindset things. On the other side of the coin, I can sort of think, well, the all cap has so many shares in it, on stocks rather, it might flatline out. But which is the bigger? S&P's cheaper than the all cap and all these sort of different costs. So I've got to really think about that. So we'll have to have a look. Anyway, at the minute, I'm just going to leave it as it is. Okay, because all 3 of them have followed the exact same pattern and they're all pushing up to the next extension point. So I'll see it, and if I see one of them starting to wane, I'll just kind of manage it out. Anyway, story for another day.
I love it when a plan comes together.
So this is the Vanguard itself. This is the statement from this year. So we started in April. That was the financial start of the year, and we started pretty bad, to be honest. It didn't really work at all, and I had to juggle things around a bit to think about what I was doing, and it lost 1,700 quid. It was quite a chunk of change, but moving it into the format that we've got, later on through the year, I did liquidate the emerging markets, and I did make the decision to pull out a lot of it from the S&P 500 and then restart it. And I do keep pulling out of the S&P 500 and loading into the all cap. And now I'm toying with the idea, as I was saying, changing those 3 pots around. I might, you never know, I might just split it across the 3, or I might just switch 2 of them off and keep it together. It is something I'm going to have to seriously think about, as said. But as we can see, each month it has been growing quite well, and I've got a cumulative return of 24.4%. Now that's my personal rate of return, and I do fund this as well. I do put money into it from, like I say, the small accounts, surplus money I've had, I've cashed things in and put it into here, just so I can start seeing it as a portfolio. Now if I look at the overview, what we'll start seeing is there's the breakdown. Just move that into shot. There's the breakdown of what this actually is, and there's £94,000 there, real money, you know. And this comes from just the surplus money you see me trading all the time, you know. The investments themselves, if you look at here, this is the breakup. Most of it is in the all cap. And we started again with the S&P 500, but I have to think, do I start really accelerating into that, or do I just cash out the 500 quid that's in there and keep it as a singular thing? And it is something that's running around my head constantly, and I think the answer is the same as my day trades. When in doubt, stay out. So if I doubt that market, I'll stay out of it. Now I might just leave the money pots as they are, but concentrate funding instead. In other words, the sort of 500, 600 quid I put every month into this, instead of just putting it across the 3 funds, sort of 200 into each, I'll just put the 600 into the one that I think's the strongest and let the other sort itself out. You know, and as it moves down, when I see it's at the bottom, I'll then start paying back into it again. Or I'll just roll it over into one pot and pay the 600 quid into that as well. I don't know. It's quite a quandary for me at the moment, and it's still whirring in my head. But at the moment, I think letting it be for the end of the month is going to be right. Now, there is the US elections coming. Now, that could trigger the clawback that's being muted. We don't know. But this side of Christmas, I think I'll probably just be leaving it alone and then reevaluate it in January. That might be the safest thing to do. And if it starts losing money, well, I'll just have to reassess it. I don't know. But I'm interested in your thoughts on your long-term goals. I'm trying to keep this as simple as possible by just having no more than 3 pots. Ideally, I'm really struggling with this one, guys. I really am. Because all 3 pots are running exactly the same. So I'll have to look at the costs of the pots and the average return of the pots. But the winner has been, for this entire year, the all cap. It's by far and away been consistent with decent returns. So if I was to roll over, it's probably going to go into that. Okay, so that's kind of the decision while we're on. See, that was a decision made while we're on camera, boys and girls. God, I've got a headache now. No, I like to plan things out, and I like to sound it out in my head. And one of the reasons why I was kind of giving you a snapshot of the charts and the levels, if you've got markers on the chart, you can make solid decisions. Because the one thing I never want to do is try and work out what the political landscape is or what the financial landscape is in 3 or 4 months' time. I might as well be Mystic Meg.
Septic peg.
Because nobody knows. If I could figure that out, I'd put the lottery on. But I can't, so I have to work with what I call common sense. And I just look at what I see. I originally split the pots up to sort of spread the risk out, if you want to call it risk, or spread the investment out. But now I'm leaning towards running them together with a pot that already has that spread built into it. And that's the all cap. So I hope that kind of makes sense in a way. These videos, like I say, they're not scripted. It's just me, my thoughts, and giving you an idea of where I'm up to. But for this month, I was paid for the entire month by the 20th. It's actually today, but it was actually a few days ago, so that was well in advance. My investments for my future are growing quite well. It's got a good rate of return. And when I come to start looking to cash this in about 6 years' time, that'll be a sizable amount of money. And it'll certainly go to help either my grandkids or my own retirement, and both, you know, because I have other investments as well. So when you want to know where my trading profits go, I've just shown you. And I can't be any fairer than that. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.